Earnings season is kicking off and the big conglomerates are going to highlight it, Scott. I'm Jill Malandrino with Options Profits.
And I'm Scott Redler, Chief Strategic Officer of T3Live.com.
Let's take a look at GE. This name's going to report Friday, April 20th. Yes, it traded down as the market pulled back over the past 5 days. But you have to remember, these big conglomerates have that international exposure in finance, multi-industry areas of the market, so they kind of get hit on all ends when the market's doing bad, and they also perform when the market is doing well. So Scott, going into earnings, if you're already long the name, do you look to accumulate here? Do you look to get involved if you're already not long the position?
I think if you're already long the name, I think you stay with what you have. You've probably been riding it this year. It's still well above where it started. You know, you've had some nice trades along the way, and if you're not long the name, perhaps, and you think the market's going to make higher highs this year, which I do think we're going to have, GE should be a stock within your portfolio. So if you look here at the chart, there are some times when it makes sense as a trader to trade it. You know, if you look back in December, you had a nice little pattern here. This is when actually some sizzle came to GE, you know, and then it just kind of trickled higher. Then finally, you had a nice little momentum trade again in late March for this move. And then recently, just like the rest of the market, it kind of rolled over back into support. So if you actually were long it and you sold into some strength, good job. You know, you could maybe buy up some back here if you're not in any GE and you're looking for GE exposure. I think buying it in this, $19 range makes sense. And at some point later this year, when the market gets back on track and we start, making higher highs, there'll be some type of momentum trade above this 20. And like you said, I don't think you need to see a blockbuster report in GE. They just need to be like in line, and then the stock will take it in line. And then once the market starts acting better, I'm sure GE will go along with it.
Well, I think what's interesting is every quarter that we do our work together, we're always looking to identify trends. And what we were talking about during the long call version of the morning call was, what is it going to be for going into Q2? There's really nothing that identifiable, and I think what we need to focus on is less than disappointing earnings. Sort of like with Alcoa. It wasn't a blowout quarter by any stretch, but it under-disappointed, which I think is going to be the key going into Q2. So we'll see, if GE can.
Well, that's important, and with the market pulling off 4.5% off the highs, the street and the market's not expecting much. And I think my thesis for the second quarter is sideways to down, digest first quarter, not give back too much, not fully fall apart, so then we could have a good third, fourth quarter. And I'm not thinking we're going to get 22% off the highs like last year, but I think this 4.5% is a start, and perhaps I would put a decent sized probability we might get 7 to 9, but obviously we need to see the consolidation and the earnings beforehand.
Okay, everybody, don't forget Scott every day on Options Profits, wrapping up the charts for us. Thanks, Scott.